The Trump administration in chaos and the Trump agenda in doubt, and investors start to look for the way out. More about all that and much more when we start the show.
Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next week. And hopefully, lots of great ideas and opportunities for you throughout the show. Well, the stock market hit an air pocket last Thursday as the market was really in an extreme overbought situation, which then collided with some really bad background news. Stocks tried to move up early in the week as tensions around North Korea had eased. But President Trump is under constant attack about his comments following the violence in Charlottesville. And the Democrats are simply at war and doing everything they can to uproot the president. Supporters, well, the corporate supporters especially, are leaving their committees and leaving Trump support in droves. And the Trump presidency is simply in chaos. And now it has been reported that Steve Bannon has now been dumped. So he's out, and it's all about the optics in that case, trying to look good, but damage is certainly done, and the Republicans are highly critical also. So there is just some really bad background news going on here for the Trump administration and certainly the Trump agenda. In fact, the chance of passing anything right now is like zero, as there is just no way that it makes sense, I think, to anybody to be a supporter of Donald Trump and get painted ugly. So that is just what's going on right now. Of course, things do change in this world fast, so that I suppose could change, but right now it's a chaotic situation, certainly. And add to that the horror in Barcelona, Spain, with now, after that terror attack, 14 dead now reported with 130 injured. It was a horrible thing where that van rammed a huge crowd there. And this is now the second Thursday in a row that the stock market has had a sizable decline. And there appears to be more of a tone change going on. I'll talk more about that. The stock's amazingly bad period of news here seems to come, well, almost coincidentally with the fact that the technical aspects of the market have been talking about a correction coming. So it's amazing how that happens, and that just the timing seems to come in to match. Really, it's more about the market's susceptibility to decline, and that decline certainly happened two Thursdays in a row with those air pockets that we saw on the downside. And we saw the S&P 500 on Thursday of this week declining some 37 points. So it was a very sharp move to the downside. In fact, let's take a look at that on our 60-minute chart that you can see right here, which looks at the intraday movements of the market. And you can see basically we got that relief rally on Friday, which came as the tensions eased over North Korea. And China data came out really weak, and oil breaks for 2.5%. But Japan GDP really was strong, up 0.4%. And Bitcoin soared at that point over 4,200, and it continued to make new highs during the week. So we saw this update can't come in on Monday. We saw this news out on Tuesday where export prices surged 0.4%. Bonds had a drop on that, and the dollar finally started to move up as interest rates started to edge up a bit. We can see that the market basically broke early and then kind of moved sideways. There wasn't a whole lot going on. Overnight here on Wednesday, Europe had good data, and they led the United States into a rally in here. But then the Fed minutes came out during the day, and the members were split in there. They were overall, again, very dovish. It's all about not seeing the 2% inflation growth that they're looking for. It's sick. I mean, it's at 1.7%. Are they going to keep these ridiculously low rates at these levels? Scared to death that they might break the market, which looks like it wants to break anyway already. And we saw what happened on Wednesday. We got a little bit of a downside move in here. Thursday, the ECB came out, and they had concern about the strong euro. So the dollar got an upside move. The euro had a break, but then selling really started to come in. And then on Thursday, that doubts really were hitting about the Trump agenda. And then when rumors came out that Gary Cohn was resigning, which turned out to be false, at least for now, then the market added to a free fall condition that we saw in the market in here on Thursday. Friday overnight, you can see they kind of held in here. They tried to edge up a little bit. There was a lot of selling that came in during the morning, first hour. Then we got a rally. Consumer confidence was strong, and rumors came out, and then it turned out to be true. The confirmation that Steve Bannon is out, and I think the administration just thinks it's going to make them think that they're acting in ways that are sensible, prudent. I don't know. It's all about what they look like. Market got a rally, but we're in this one of these periods where rallies are not likely to hold, and you could see it started to pull back again here as we have about 2 hours left on Friday. So that is a look at the 60-minute chart for the week. So we're, in the short-term view that I'm going to do at the end of the show, I'm going to talk about the stock market and why this is a very risky time, and we're in a time where there are some very risky patterns. Now, this huge loss of support from Donald Trump is a huge risk to stocks, if you ask me. With his plan for tax reform, repatriation of $2 trillion back to stimulate our economy, a look at the potential for the big infrastructure plan, all of that stuff was supposed to be stimulative and positively affect our economy. And the stock market celebrated and moved up, and that is priced in a big way. But now, with all this certainly in doubt, it's priced out or getting priced out. And by the time investors get done being in a place of believing totally that you could buy the market forever, to a loss of faith and them really getting out of the market could be a long period of time, and actually a very risky period of time. Add to that now what is just civil unrest that is scaring me like it did in 1968. Yeah, I lived and watched all of that in 1968, and the riots here in Chicago and the burning, and that's not much different than tearing down the history of the United States and the civil unrest that we see going on right now. So that's a real reason also for fear. I think that the risk is substantial in coming weeks, and I think that the buy the dip mentality is soon to disappear and quickly go to sell the rally mentality, and we might actually be in that already. So that is what I think the big concern for the markets in here. An extreme overbought condition where the markets have gone up for a very extended period of time. I want you to go watch my stock sectors video where I look at 12 index charts all the way from monthly down to intraday charts and do some pretty deep analysis in there. If you're not a member, please do become a member and watch that video. And I show you why it's very likely that much lower prices, or at least a window of a big correction, is at hand. And I think we're going to see those much lower prices coming up really soon. That's it for the opening segment. I'll be right back with the best and worst stocks for the week. All right, for the best stocks for the week, when we get into periods where the market starts to really thrash like we have right now, we get into periods where there isn't all that much to report on the upside. We're way past all of the earnings season. We still have a little bit going on as far as earnings goes, and lifted some stocks in here like Alibaba and Urban Outfitters got some pretty good moves, and there isn't a whole lot to show you in here for the best of the week. I'm going to switch over to a chart here of Alibaba and give you a sense for what I look at here, and you'll see my cycle analysis on this chart. Here is the weekly chart of Alibaba. Now, Alibaba reported earnings. They were very strong. They're up about 9% on the week, and you can see in here that the stock has been in a strong upward trend. Now, for those of you that are cycle analysts or that are cycle analysts in training, my students, you can see in here it's got kind of long cycles. In other words, these are the cycle brackets that you see right on the bottom, and the distance between those important lows that you can see right there are pretty close, and you can see that one right over here, not far off either. So these are your individual cycles as marked off, and this one hardly got a decline. That shows you how bullish it was, and then soared up here. This is the 161.8 fib extension. It's an amazingly powerful stock when it can make it up to that kind of heights, and you could see now that we're looking at is a potential that it's going to stall in here and then get a correction. We wouldn't be surprised to see this roll over, give a little ground, maybe get down to the 156 area, which is that 23.6 support, and then get further rally in there. This is a big move, and it really hit an important area, and we think that it's likely that it will be pulling back. Urban Outfitters, URBN, is the next one in here. Now look at how ugly this stock is. Now, this has our colored phasing in it. We do this on some of the charts because we want to help with illuminating what the different charting phases are. When you're making an important low and you get into a rally phase and it rallies, that's a green phase. When you get into the corrective phase, it's yellow, and you could see the green yellow right in here, bullish, green yellow, and then it breaks a key low right over here, and that turns it red. Once it does that, it declines through the timing right here, and you could see it exactly did that. And it did it again. It rallied and failed and then declined right through the timing, and then had those earnings. Earnings were a big beat. Sales were strong. I think it caught all the shorts by surprise. I don't like this company at all. I think that their execution is extremely poor, and I think that the stock has really shown that. Now, you can see it tried to rally up here, got into the resistance zone, and then pulled back again. I wouldn't be surprised to see it try 21.5, 22 again in there, but that is really a rough spot, and I have a lot of doubts if it's going to be able to do much better than that. I have only one more stock to show you that was up of any significance on the week, and that is Micron. Now, Micron is a really bad pattern, and it got a bounce in here in what we think is a bad pattern. Now, it's bad for the next month and a half or so. Then after that, maybe it comes to life again, and maybe all of this is just a correction right in here. But right now, we see this declining into early September, pretty much in line with what we think the stock market is going to do. You want to see the cycle analysis? Look at the significant lows and how well that they are timed in here, and how that creates an uptrend as it dances up this 13-week moving average, which each high a higher high and each low a lower low, and you can see that, and it's just a perfect cyclicality in there, and this declining phase is due to end in late September. So that says to me that maybe we have 5-6 weeks left in here of some correction. I would not buy Micron based on this. I certainly would wait for what I think is going to be a much better entry for Micron coming up. That's it. All I have for you on the best of the week. And now we're going to switch over to the worst stocks of the week, where I have a few more. All right, for the worst stocks of the week, we have to go to retail again. I mean, we had Urban tick up 8% for the week as a retail stock that certainly is going contradictory way to what the rest of the retail stocks are doing. Foot Locker set the trend for retail late in the week as their earnings were disastrous. They were really horrible. I mean, a huge miss, sales a huge miss, and the stock gets obliterated. And the stock right now for the day on Friday, down 26%, down over 30% on the week. And you can see right here, again, cyclicality that shows its head and a really negative pattern that was in here, and it just absolutely breaks in a big way. I'm a huge follower of momentum, and this momentum in the stock has been just terrible. It has not been able to get much of a rally. Here's your kind of triangular or a rectangular shape in here where it spent about a month and a half consolidating and then absolutely implodes. Here's one implosion right here. Here's the second one right over here. The stock moves, from nearly $80 down to $34, and there is some sad investors in that one, I'll tell you. And this one is due to bottom also late September, beginning of October, and Foot Locker is really in bad shape when you see that. So I would say any rally in there is a sale. Now Nike, of course, in the same category, and there's talk about a sneaker recession going on. So Nike down about 6% on the week following that. Nike has got an odd pattern. I'm struggling with the analysis on that. It went up when I thought it was going to still have further trouble, and I think actually that rally was a fake as the stock then starts to move to the downside again. So Nike looking pretty awful also. Dick's, we've talked about Dick's a number of times. That is Dick's Sporting Goods, DKS. Man, I was in Dick's Sporting Goods last week. I went in there just to look around. Massively huge store, massive amount of inventory, a pretty good number of employees in the store, and there were like 4 customers in this huge store, including me. So it makes me really wonder about stores like that. And of course, then there's the Amazon effect, and now the Walmart effect, which is coming up strong on Amazon. So here you see right in here this Dick's Sporting Goods, and again, the cyclicality that is just horrible. Dick's gave us a cycle low violation right here at about $45. It's now at 26. This pattern in here said that it was likely to decline into late August or the beginning of September. You could see that, and it was just annihilation. Again, a stock that's come from $62 all the way down to 26. And when you have these negative patterns shape up in here, you don't want to be long stocks. I mean, it's just not a healthy way to trade or to be an investor. So, there's so many people just buy these because they make up their sense of valuations, where they don't really look at these patterns. I mean, when the patterns are bullish, in other words, when you have a cycle bottom and then another cycle bottom that is well above where it started, and then a new rally phase beginning, and then a breakout of the downtrend, I mean, you've got an upside trend, very likely in that case. When you do the same thing in here and go to the upside, but then break the low, you have a downside trend, then a downside trend. And all you have to do is follow these, and you would never get caught in something like this unless it just came out of the blue from all-time highs. So that gives you an example of the benefits of looking at cycle analysis. This one was plainly not one that you would be long. Coach, COH, well, maybe the bottom pickers would be long. Coach, here's an example of one that, just had a huge break as they fell right off of their highs. We warned about these luxury retailers, and we didn't understand how they could be doing so well. Here's the daily chart in here, and you can see that there was actually a very nice inside down pattern right in there, or a double star, evening star that made the high. Now this one didn't really give a good indication, so occasionally you get caught with a move out of the blue, and Coach essentially did that on its earnings as their earnings came out about in line, but again, when you don't please investors with revenue numbers or sales, then you're susceptible to have these big declines. And so Coach gets a big move to the downside. One of my favorite stocks to hate was down 12% on the week, which is JCPenney, where my target was $2 when it was trading at 14, and it's now trading at 3.5. So $2 coming, maybe worse. And the last one we're going to look at in retail is Under Armour, UA, and another one that has been really, that's actually UAA. UA is the old symbol. And this one is one that has given us warnings, and we thought it would continue to the downside. And there you have it right there, as this projects to continued declines also through late September, beginning October. Amazing how those retail stocks are in synchronicity. On the downside, again, you can see the continued breakdowns where you get lower peaks and lower peaks and lower peaks and lower peaks and then lower declines, and until you get a base that forms, in other words, where you come down, make a low, rally, and then don't make a new low, you're still in the downtrend. So this stock falls from $54 all the way down to $17, sub $17 in there, with now looking like it has another 5-6 weeks to go on the downside. So at least that's in this particular wave to the downside. You can also see how the 34-week moving average was a significant problem for it right there, and continues to be. And that's a real good look at a downtrend in these retail stocks that really overall have looked incredibly sick. No reason to buy them unless you're make up some sense around value, or you think that the Amazon effect is going to end. I don't even see the reason why they should be bought until they prove that they could build a base and sponsorship comes back into that group. Another stock that we mentioned 2-3 weeks ago was Deere. Deere, we said we didn't really understand the rally. The agricultures were so weak. We're making new lows in all the grains. When historically, when you do that, then the farmers don't have a lot of money, and Deere is in heavy machinery also, and of course that would be mining equipment, those things. But the truth is that Deere was up and it made no sense to us, and so we warned about that one. And now Deere has rolled over in a big way, and I'm going to call this the worst pattern of the week. Now, I just showed you some bad patterns, right? But there's stocks that are down already and have been getting decimated for a year and a half. So there's not much that you can do in those kind of stocks. But when you see a breakdown like this in Deere off of its highs, you have a situation that is set up for some further nightmare to go on. Deere for the week down about 8%, and there is more to come. So you remember I was telling you, the positive type patterns where you make higher highs and higher lows, and you get these upward movements that you see are just phenomenally strong. And then you have the rally to a new high like you're supposed to and break that cycle low. Well, that's what it did. This is a major breakdown that we see in here as it broke that low. This decline points to October, early October right here. We are looking for 6-7 weeks of big downside action there. Supports come in at 112, and then at this cycle low right here at 106. So those are the numbers that are our targets on the downside right now. For the next 6-7 weeks, we think that Deere is a screaming short as it tries to bounce back at all. So that is what we will call a major breakdown in there on as their earnings report came out. And let's just take a peek here. What did their earnings say? Well, they came out exactly in line, but sales were really worried, and you get that move to the downside pretty significant. Let's take a look here at the daily chart. You could see our daily cycle analysis in there also. So you had this evening star pattern that formed in there that made that top. And then you had this loss of momentum, that's that little blue arrow right there, and the collapse. And then it comes down right to this cyclical low period right here. So what that's suggestive of, and you could see our forecast in here, is it looks like a bouncing area. We're going to look for a bounce in here, maybe a little bit more, and then roll over and bye-bye. So that's really the way that pattern lines up with the weekly pattern in here. Let's take a look at the weekly pattern right here, and you could see in here how this red area aligns with the area that we see on the right chart. So all of that red area points to this area on the right, which says do not trust any rallies. We think the deer will be moving sharply to the downside. Take a look now at energy stocks. We're going to look at MRO and RIG, Transocean. These stocks were down 10-11% to the downside. Now oil, we were looking for an upturn in oil, and it came on Thursday, Friday. It really came pretty strongly on Friday, where it's now, let me just take a peek here, up $1.42, which is 3% on the upside. So it followed our pattern pretty well. We'll talk about that in a moment. So that should be good for oil stocks in general, but this marathon has got a scary pattern in here. I'm really worried about this. I'm also worried about Exxon, as this could be just extending, but this is one of those patterns in here where you got this green rally zone and then it comes down and breaks this low. That is really worrisome. So I'm concerned about these major integrated oils when you see something like that going on. Now, CVX and Oxy, both down about 3%. Exxon down about 3%. Exxon is a worrisome pattern. CVX and Occidental, OXY, both have better patterns than do MRO or Exxon. And here is another one of those where it makes this rally and then comes down and breaks it. Now, you see this dotted line right over here? That's the OIH. Now, it's possible this is just a little later low because it's following the whole group rather than following its own cycles. So its own cycles, and there are that blue, that kind of lavender line right there, and the OIH group cycle is right over here. So this could be just finalizing the decline. It could be a major breakdown. What I don't like is that it got up right to the 38 and then rolled over and broke this low. That tends to be a really bad signal. So unless oil soars, I'm worried about these oil stocks and say there just may be a liquidation going on in here that isn't done that could last still for some months. So that is really an important thing to look at. And if you're an oil investor, I would be watching these stocks carefully. If they continue to show weakness, and if stocks like the ones that are holding up, like CVX and that Chevron and Occidental, OXY, if they start breaking down, man, that is going to be really bad news, and bad news for that entire sector. And if oil doesn't make a move and get up over $50 pretty soon, it's going to be also in some trouble. And I actually want to show you that when we get into our short-term view, our extended short-term view for the coming week in 5 major markets. Coming right now. All right, short-term view for the coming week. We're going to look at 5 major markets in here. Before we do that, all the work that you see right now takes us a tremendous amount of effort. Doing analysis on the charts, drawing the charts, preparing the presentation, and then, of course, the whole staff that we have here to make it all work. We really appeal to you to become an askSlim member at any one of the levels that we have here to see just our videos or our rankings and trade setups and all of our videos, or get all of our charts on your TOS platform, plus everything else. There's 3 different great categories of videos there, and you can support us so that we can keep bringing all this great information every week to you. So we really encourage you to become an askSlim member. All right, so what we do here is we look at the 5 major markets. I've got all of my notes here, which I'm going to set up in place for us to see, and we're going to look first at the energy market and at the light crude. Now, what I just said in light crude was that my hope was that it would move up and get above that 50 level and save itself from maybe some trouble. And now it's kind of looking like it's going to do that. I'm going to put up a daily chart of the light crude /CL, and I'm going to put it up for 2-year daily, so everything is lined up correctly and give you an idea of what I'm talking about here. So here is light crude. Now, what we said last week in light crude was that we thought that it was going to dip and then rally. So let's take a closer look here, and you can see now our downside objective was 47.30, and we thought it would rally, and we thought it would be slightly up on the week was our call. So it got down here to about 46.50. So it got lower than we expected, but followed the pattern we were looking for exactly. When that happens, we give ourselves about half credit for that because we actually said it was going to be small up, but it didn't quite make it to small up. It made a little better dip. So that says to us that we are only about half right on that. The reason I want to show you that first is so you have some sense about how I do my accountability on this, because what we do is we look at what the pattern shape is. We look at levels, and we kind of look at whether we think it's going to be up or down for the week if we can see that. So there's really 3 ways we grade ourselves. This week we were a 65 to 70%, which is great. We really want to be about 2 to 1, really getting it right. So that's what we did, and we think it was really good overall for the week. We didn't really miss anything completely, though we missed some levels on some things, especially missing on the bond market, which we thought was going to be small down and actually was small up for the week. So let's go back to this light crude chart right over here so you could see what we're looking at. So we expected it to tick up. It's now ticked up into this minor resistance, up 3.2% now for the day on Friday, following the pattern that we were looking at. Here is the momentum in here. Now, momentum was positive in light crude, and now it has gotten to where it is neutral. So I don't really have a good reading out of that. We are getting a little bit overbought here on the projection oscillator. Now, we put up a setup a little bit early last week on gasoline /RB, and you can see that right here. We thought that it was going to get support near the top of this support zone. It actually just barely broke below the bottom of the support zone and then popped up. So it's gotten a bounce back in here, but our entry on this was a little bit early, and you could see in here the same thing. It was positive momentum and now has neutralized and now has gotten a little bit overbought. So that says to us that we might get a little more chop in there and not be able to make any real upside ground into the next week. But we still think there's a higher probability of it going up than going down. Let's just take a quick look at natural gas, because natural gas is one we were bullish on. Also, we thought it would dip into the minor support. We called it the buy zone. You could see it's starting to get support in there, but it's down a little bit today on some on some weather news, essentially. Where it's supposed to be a little cooler, so it's less air conditioning use, so natural gas ticks down. So that one is moving to the downside in here, and you could see in here also momentum is neutral, but it's a little bit oversold. So we think natural gas has got a pretty good chance at popping up again. When I project for the week in light crude, you can see right here that our projection is for this resistance zone to kind of hold it a little bit, maybe have a little bit of a pullback. We're going to call it getting up to about this area up around 49 to 49.10, and then a roll over, and we think that would be the spot where it would just stall for a little bit and then roll over to the downside and get ready for another try to the upside. So this is kind of a minor resistance area there. So it was really weak, but it got better, as you can see, and we're just going to say that we're likely to get a choppy week in here without a lot of movement, and the potential for a little bit of a pullback in here. But we don't really have targets yet because we don't know how high this little rally is going to get. So we're just going to call it a choppy week, not making a lot of ground, but potentially setting up a better week after that, as these trends you can see are pointing to the upside. So if you're not familiar with what you're looking at here, this is the bigger cycle right here, and this is the trend we're looking at right here, and then the smaller ones are this right in here. So we're looking for it to kind of roll over, pull back, and then move back to the upside again. So that is a look at the energy market. Next market we're going to look at is the currencies, basically the dollar and the euro. We had expected the dollar to get a rally, and the dollar did try to rally. We thought it would be a small up week, which is pretty much correct. We thought that the euro currency would have a small down week, and that was pretty much correct. So of course they move inverse to each other. We thought it would get up into this minor resistance zone, and you can see that's what it did. So we're just looking for a narrow, choppy week this week. We still think that there's more upside to the dollar into September, but you can see what we're really looking for is kind of a sideways move in here, and then move up again. We do not see a big move in here in the dollar. I think people are really confused about the movement in the dollar, the euro currency, and how that all relates to the turmoil that we're seeing here in the Trump administration. So I don't think there's going to be any really big moves in there. But then the euro currency in 2 weeks looks like it's going to be in position to move to the upside again. You could see here we're looking for a little downside action. I think this area at 1650 was our target last week. 1655 we said. It got down here to 1677. So pretty close. We're just going to look for a little choppy downward move and then setting up an upside move in here in the next couple weeks. Now let's take a look here at the momentum. You could see the momentum here is still strong in the euro currency. When you look at that, the dollar momentum is still extraordinarily weak and really struggling. Now it's holding a little better. You can see in here the projection oscillator has gotten a little oversold, and we haven't lost any ground, so I give that a slight uptick in rating, but really you can see it's still pretty negative in there. But when you look at the Japanese yen, I want to switch this over just so you could see. This is super strong in here and a super good pattern. When you get oversold in the projection oscillator and you can't even lose your upside momentum in here, that is really bullish. And when you look at the Japanese yen right here, you can see it got right up into that resistance, double top, and then pulled back. So Japanese yen to us looks like it's super strong. It is overbought and rejecting in here. So this is another reason why we think the dollar has a little more time in here. This points out second week of September before this corrective process is over with, and I think that's going to be a time period to really buy the yen. We have a intermediate analysis that's changing a bit in there and is suggesting that the yen could have a very strong upside move coming in the fourth quarter. But you're going to have to become a member and watch our intermediate analysis in there in order to see it there. You can see the yen here, super strong momentum. Just want to make that really clear. And that for that reason, we don't really think that there's going to be very significant downside move in there at all. So yen super strong, euro really super strong, and the dollar having a very hard time getting any real kind of advance. But we were pretty right on the way it was going to trade, what we said last week. So gold, we said last week, would have a test of 1273. And silver, we said a test of 1655. Those were downside supports. And we said there was risk of an upside explosion. Well, we don't get full credit for this because we actually thought there would be a small down week for gold and silver, and it was a small up week for gold and silver. So we'll take a look right over here. We'll take a look at /GC. And here you go. So this GC pattern, you could see again, like we saw in the yen, that it gets up into this resistance area right there and then rolls over. So that is a pretty good look at a solid long-legged doji, and it gives you a sense that, you know, we expect that this market is going to roll over into a minor correction. we still see the potential. We see minor downside in here only, and a choppy week. But then after that, after a week or two of potentially some of this right in here, then we see that it's likely that we're going to get a big up move when it comes in the I would say late September or fourth quarter is where there's really huge upside potential. So right now we're just looking for a choppy market in here, minor correction, with always the risk that the upside is going to take over. So right in here we have this buy zone in here. We'll call it between 1283 and 1289. That looks to us like a spot where we would want to consider entering on the long side. There's another little number down over here around 1278, but all of that to us seems like potential areas to be a buyer. You could see in here real solid upside momentum in the gold market /GC, and you could see in here that in the silver market /SI that you have strong upside momentum also. And take a look here at this chart. The same thing that we're looking at. You can see this next week and a half or so, we expect it to pull down. We think this minor support is a very strong buy zone between 1673 and 1656. So that looks to us like, that it's just a minor corrective period, and here's small downside potential, but then after that risk again of an upside explosion in September. So we just think that this is a period where it's going to chop back and forth, but I think it's really going to be an accumulation time for gold and silver. You need to watch our big picture analysis on gold to get a sense for what we are thinking about that. So we thought silver would come down here and test 1655. It exactly nailed 1655 right there and turned to the upside. We thought gold would hit for this correction during the week and then turn up around 1273. This was 1273 on the money. So you can see that those support buy zone areas, they are often really good spots. Occasionally we put them up and they get the future stock runs through them. And most of the time it turns out to be a really important area. So you could see that right there. In gold and silver, we're just going to say that it is a spot right now where they should just really be in a range, consolidation range. We actually think that the bond market is also going to do the same thing, remain in a wide chop. And basically, I think that the bond market is in trouble. In other words, I think that intermediate-wise, it's a negative period. However, when you get in a period where the stock market has a lot of risk, then you get the flight to safety and you end up having the resistances push down and the flight to safety create buying, and you end up in ranges. And that's what I think we're getting right now as we get into the bond market /ZN is what we're going to look at first. And take a look here, and you can see that it comes up to that resistance area, that's 78.6%. And as the flight to safety came in, it bounced right off of that short-term support that we talked about last week. And now you can see stalling. So our range for the ZNs that we're calling for this week is 127.08, 126.08. So the way that lays out in here is, let me just pull this down a little bit right in here. That's this level right over here, 127.08. You can see it right across here. And you can see I have a little warning to myself at that level if it gets above there, because that's an intermediate resistance level. And 126.08 is right around here, the bottom of this rising support. So you can see we're pretty much right in the middle of it now, and we have this corrective period going on. So flight to safety fights corrective period. period and you end up in a range. That's why we're calling for that. Not any real significant moves in there. We have very similar here in the ZBs. The range that we're looking at in the ZBs is 157.05 on the top side. So that's right basically over here, this cycle peak resistance that you can see our little alert right over there. And on the downside, it's 154.16, which is this short-term support, which I did not draw properly. So it's this short-term support right over here. So that's the support area. This is the resistance area. You could see we're dead set in the middle. Corrective process going on in here. At the same time, we have flight to safety coming on in here. We think it's going to be in that range basically, and that's I don't know, it might be an opportunity to sell some premium if you believe that to be the case. Take a look here. You can see that you have positive momentum in the ZBs very clearly, and the ZNs you have positive momentum also. So the flight to safety is certainly keeping a bid in a market that looks to us like it should be in a period of correction or decline, and that's why we're just going to call it in a narrow chop. So let's look at the bond market. So now we're going to look at the stock market. What we said for the stock market last week was that we thought it would be a choppy week. We thought that it would make a low early in the week, it would rally, it would hit the resistance, it would roll over, and you had a lot of risk of big declines. And I would call that pretty spot on. It rallies up to the 618, rolls over, and then moves to the downside. Let's look in some detail at all of these indexes and get a sense for the SPX first as we look at the short-term daily chart. And you can see in here what I just described to you was now you'll see that there's a dotted line, some dotted lines in there. Those are alternative cycles that we have as we see an important bottom that came right in here and then a rally and then rolls over. So we're always looking at the alternatives. We always want to understand the possibilities of some different formations. Right now we're in the formation that we originally looked at, which was the low that occurred here, the rally, the sell-off. That's this one right in here. And then the next rally and then the next sell-off, which goes out to here. So this was a pretty feeble rally right in here in only 3 days, but that's what happens when you're in free fall type markets, and then it comes down again. So you can see the red arrow here. The momentum has now switched to negative in there, and I think that we are in a market that has massive risk when I look at this. These are the patterns that we get when markets are in free fall markets. Here you could see the S&P 500 for the first time since last April has now gone to negative momentum. That is significant, and there are, even if it only lasts for this period of time, which would be very rare, that would be about 2.5 weeks of time. And I think that, our projected low was sometime in late August or early September, so that wouldn't surprise me. I think that this is a very risky period. Let's just look at all of the momentums while we're here. The NASDAQ really in a whipsaw. It tried to look better right over here as Apple got legs again, but now it's lost its upside momentum. And the Russell, RUT, you could see it was the first one to turn down. We warned about that, and the momentum in there is very negative. Here is the massive downward pattern in Russell. It came up and hit our sell zone right on the money, you can see right there, and then rolls over. And here is this pattern right in here. A couple more days down, an attempted rally, and then more free fall. That's what it looks like. But the projection oscillator is a little oversold, and right over here on this bottom, the market forecast indicator is flashing a buy. Now it flashed a buy right over here, and we said that we thought we'd get an uptick. And when it did, it rallied $20. It was huge, but the market's just too weak. It couldn't hold up. Right now, we're massively oversold again, and that says to me that if I'm right and we're in a free fall market, the market continues down in a big way, I'm expecting the Russell to overperform based on this. In other words, not fall as much on a percentage basis as the other indexes. So that was just worth showing that to you. So overall, let's just take a look at the NASDAQ chart right over here. I don't think I looked at that one. And you can see that right in here. So the NASDAQ got down to the short-term support, and its pattern looks like it has some more dangerous days coming out here again. And here's that alternative pattern, which would extend the low out to the first week of September, which is where we're guessing that this wave of this free fall is going to end. So we think that there are much lower prices in there. Let's go back to the SPX, S&P 500. And this cycle low support right here, 1407, 1406, that is our immediate target right now. And there is another one at 2380. I'm switching over here. I normally don't show this, but right over here at 2406, here's the other one at 2387. Usually I don't show the weekly on this segment, but I want to get those numbers because we're in free fall. So 2387 to me is really a reasonable target in here. And remember, this was our period of extreme risk, and you can see that certainly was a period where the market moved down in one significant way. You can see that. We don't think it's over. We don't think the rallies can hold, and we think that 2406, 2387, keep your eyes on those particular numbers. One more thing to look at, and here is the intraday, and I want you to see these, look at the S&P 500, the Russell, and the NASDAQ, and all of them in negative momentum, and pretty severely so. So you're moving a long way down away from the slim ribbon, the 13-day moving average. Generally, when you do that, you get some choppy action, but we still think the trend is down, and all of those are absolutely negative when you look at that. So you might have some reason to believe you want to buy dips, but I'll tell you, if you want to buy dips, you could be in some real trouble. Kind of waited till the end of the show to give you a little roundup on what happened this week. Just try to switch things around and see what I like the best. So the stock market for the week right now, the NASDAQ, the Dow Jones Industrial, and the S&P 500 all just fractionally lower after that big chop I just showed you, but the Russell down 1% on the week. The bonds, the choppy week we had with only small gains, and as that flight to safety, the dollar also had very small gains, and very substandard actually based on where I think we are. The gold market, a choppy week, and it rejects an important level, as you could see right there, with only small change for the week in the gold and the silver market, bouncing off support in a strong way, hitting resistance in a strong way. You saw all of that with just a small change on the week. And the oil market goes to a big reversal on Friday and goes from what was a small loss to a loss to pretty close to even for the week, maybe down just a couple pennies. So overall, you could see that was what went on for the week. Do you like having that at the end of the show, or do you like having that at the beginning of the show? Kind of wanted to ask you that, and again, switching things around and see what you like the best. That's it for Market Week for this week. I hope there was some great information for you in this show. Please do support us, become a member. That's how we continue to thrive and bring you all of this great information. I will see you next week. I want you to be careful because it is so crazy out there. And we're always wishing you great trading.
Well, I'm going to sit